A very warm welcome, everyone. My name is Nadiah Jaafar from Kenanga Futures Neighborhood, and I'll be your host for today's webinar entitled FCPO Markets First Half Review and Second Half Review. Thank you for spending your precious time to join our webinar today. Please take note that this webinar is purely for education purposes and is not in any form or manner of trading advisory. Kenanga Futures Neighborhood accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. Before we start, we would like to take this opportunity to invite you to Kenanga Futures next webinar on 27 July 2021. It's about introduction to FKLI and market outlook for quarter 2021. An invitation email will be sent again to you. Don't miss out. Please remember to register once you receive the email. Next, if you have any questions for our speaker, please feel to post your question through the chat box. We will attend to your question during the Q&A session. To post your question, please draw your attention to the bottom of the chat box. Please click on the text bubble icon and it will be switched to Q&A chat. You may type in your questions into the chat box. Today, we have Mr. ZAINAL here and he's going to share with us about FCPO markets, first half review and second half review. So without delay, I would like to kickstart our webinar by welcoming our speaker today, Mr. ZAINAL. Over to you.
Okay, thank you Nadiah for the introduction. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh and good afternoon everyone. Welcome to our webinar sessions. I'm ZAINAL from Business Development and Strategy, listed derivative of Kenanga Futures, and I will be your presenter today. Our topic of the webinar session today is FCPO market, first half review and second half review for the year of 2021. So this will be our agenda for today. I will start my presentation with a review of the market performance for the first half of 2021, and then we will move to the factors that need to be watched in the second half of the year. Next, I will share with you the latest development surrounding the physical pump oil market in the first half of 2021. And then I will share to you the price outlook for the FCPO market in the near term. And last but not least, I will open the Q&A sessions where you guys are free to ask me any question and I will try my best to answer those questions. So let us move to our first agenda of the day, which is the review of the market performance for the first half of the year. So this is the chart for the FCPO price performance for the first half of 2021. Before I explain to you the price performance of this year, let us recap on what has happened to FCPO price in last year, where FCPO has registered the yearly low level around 1,900 around April 2020 due to the coronavirus pandemic that has just hit the country that year, and also because of the negative crude oil prices. And since then, since May 2020, FCPO has recovered due to the reopening of the economies, and FCPO has break the 4,000 level ringgit per metric tons around December. And this positive price action has been carried over to the first quarter of the year, of this year, where based on this chart, you can see that FCPO had risen 39.89% from year-to-date low level of 3,221 ringgit per metric ton on the 20th January to the year-to-date high level of 4,506 on 12th May 2021. But then you can see that FCPO had plunged around 20.13% to close the second half of 2021 around 3,559 ringgit per metric tons. So basically what I can summarize here, FCPO showed a very great volatility in the first half of 2021 due to numbers of factors which I will share to you later. And we foresee that this volatility might persist for the rest of the year. So what are the factors that move the markets so far this year? And basically I have summarized to you the three main factors. The first one is the slower production growth, which is a positive factors to the FCPO price market so far this year. And this slower production growth happened because of the pandemic situation, which has caused our country to shut down the borders and also has freeze the intakes of the new foreign labours. And because of this situation, most of the plantation industry in Malaysia has faced a very labour shortage, where according to the Ministry of Plantation, Industry and Commodities, the plantation industry in Malaysia facing around 32,000 labour shortage. And this is quite a severe issue because most of the plantation industry in Malaysia, they rely around 70% of the foreign labours for their workforce plantations. And according to MPOB, the production growth of the palm oil has slumped to 8.36 million in the January to June 2021 compared to 9.05 million in the same period last year. Okay, and then the second factor, which is very positive to the FCPO price so far, is the stronger soybean oil prices, which is the competing oil for palm oil. As we know that the price of the substitute for palm oil can be a very positive indicator for the FCPO. And so far, soybean oil prices has shown a very strong performance due to three main factors. The first one is because of the unfavorable weather in the South America regions, especially in the Argentina, Brazil, and also in the Midwestern region of USA. And this unfavorable weather has caused the disruption in the harvesting activities of the soybean. And that's why you can see that the soybean oil has surged higher in most part of the 2021. And the second and the third factor are the soaring Chinese imports, as well as the rising demand for crop-based fuels. However, there are still some factors that limit the upside potential of the FCPO prices so far, which is the lower palm oil exports, where according to MPOB data, palm oil exports only registered around 7.07 million in the period from January to June this year, compared to the same period last year, which registered around 7.80 million. So this decrease in export is mainly contributed by the lower China's palm oil demand, which only registered around 739,000 tons compared to 1.26 million in the first half of last year. However, there are still glimpses of hope because it was offset by the improvement from top buyer India, where India has imported around 1.58 million in the first half of this year compared to only 391,000 in the first half of last year. So basically, these are the three main factors that drive the market for the first half of 2021. So what are the factors that need to be watched for the rest of the year? So here, I have summarized to you 5 key factors that need to be watched in second half of 2021. The first is the distortion in the palm oil supply, which we expect to persist in the rest of the year. So normally, palm oil production, we expect that the production will go higher, especially around July to October, due to the annual seasonal high cycle. But however, the narrative might be different this year due to the COVID-19 pandemic, which has caused the plantation industry in Malaysia to experience the labour shortage. And this might distort the production, the overall production for the year of 2021. Other than that, we also expect that palm oil demand is going to improve in the coming months, especially from our two major importing countries, India and China, where according to MPOB, the stock levels from that two countries has in the yearly low levels, and they might exercise some replenishment activities in the coming months. And especially from the India, where their government has just announced on 29 June to cut the base import tax to 10%. And this move, we see that it could make the palm oil more attractive than other rival vegetable oils. Overall, we expect that the palm oil exports to these two countries will be improved in the near term. However, there are still some factors that might limit the upside potential of the FCPO prices for the rest of the year. The first one is regarding on the biodiesel program implemented by two major producing countries, which is Indonesia and Malaysia. For our country, initially we target to implement the B20 program around mid this year. But of course, due to the coronavirus situation, the government decided to delay the implementation by end of December 2022. And also our neighboring country, Indonesia, also decided to push their B40 program later in the year of 2022. So this situation, we see that it might put some pressure on the domestic consumption because biodiesel program account for around 20% of the domestic consumption. And the next one is on the palm oil export levy, where the Malaysian government has decided to keep the palm oil export tax rate at 8%, which was decided around December last year. So they decided to continue the implementation from 1st July to 31st July 2021. And on top of that, the recent decision by our neighboring country, Indonesia, to reduce the palm oil export tax to below 30% might provide some challenges to our local palm oil exports in overall. And last but not least, one of the factors that we need to watch closely is the uncertainty around soybean oil prices. We foresee that soybean oil prices might face a great volatility also in the coming months due to two main factors. The first factor is because of the improving hot and dry weather. However, the second factor might provide some challenges to the upside potential of the soybean oil because on the recent US biofuel programs, which was introduced by the new US President Joe Biden. However, the implementation is still unclear because recently the US Supreme Court has ruled that there might be some exemption to the small oil refiners. So we see that this might provide some challenges to the soybean oil prices. So next, we're gonna see the latest development surrounding the physical palm oil market. So here I share with you the data from the MPOB, which show the key performance indicator of the physical palm oil market. And as you can see, our export had risen from 1.27 million in May to 1.42 million. And also the inventories and production figures had risen marginally, 1.61 in June from 1.56 million in May. So these factors we see might be the very positive factors to the FCPO market in the near term. And lastly, I will share with you our price outlook for the FCPO market in the near term. So like I mentioned before, although we foresee that the volatility of the FCPO market might persist in the near term, in the second half of 2021, but in the near term, we maintain our positive outlook for the FCPO prices due to two main factors. The first factor is because of the weaker currency of Malaysian ringgit, which was traded around 4.2 ringgit per USD compared to only 4 ringgit per USD in the early of the year. And the second factor is the data from the cargo export surveyor had already shown that there are some decline in the production figures. So these two factors we see might provide support to the FCPO prices in the near term. And overall, we expect that FCPO to trade within a range of 4,000 ringgit to 4,500 ringgit in the near term. However, like I mentioned before, we still see that volatility might happen in any time for the rest of the 2021. So that's basically my presentation on the FCPO market for the first half of 2021 and for the rest and the preview for the rest of the year. So I would like to open the Q&A sessions. Feel free to ask me any question and I will try my best to answer those questions.
Okay, thank you, Zainal, for the presentations. We hope you found it useful and informative. We will now proceed with conversations. Okay, the first question from Po Jin Kang. He asking about coming trend is long or short. And second question, will break target price 4,800 again?
Overall, we see that FCPO might face a very strong resistance level at 4,500 ringgit because of the two main factors that I mentioned before, weaker currency and also production figures. Yeah, if this resistance level can be break, it might face another the next resistance level of the 4,800 ringgit. But in short, I will say that the FCPO might face a great volatility due to the COVID-19 pandemic, with cases keep on rising, and also the plantation industry, they are still struggling in terms of the production figures.
Okay. Is there any question from the attendees? Okay, if no, before we end the session, ZAINAL, is there any else you would like to add?
No.
Okay, great. Thank you, everyone. Should you have any further queries, feel free to drop us an email at futuresmarketing@kenanga.com.my. Okay, we see another questions.
Okay.
From Chi Wei Tong, asking about how could we know from the open interest volume is long or short side?
I'm not so clear with the question, but normally if we want to take any decisions, we would see from overall situation, not only from the open interest, also from the volume. And also, of course, the fundamental and technical factors also played a very good role from here.
Okay. We appreciate everyone you've been here and hope that you enjoyed the webinar today. Please take a minute to rate our webinar, and your feedback is highly appreciated. We will post the link in the chat box. And again, don't forget to register for our next webinar. Thanks again for joining us and hope to see you again in our next webinar. Stay safe, everyone. Thank you.
Thank you, everyone.